Get ready because the market is absolutely electric right now, and we've got the pulse-pounding updates you need to stay ahead. The pace of change is relentless, and if you're not plugged in, you're missing out. Today, we're diving deep into the moves that could redefine the landscape. From the massive shifts by the biggest players to the subtle signals that hint at what's next, we've got it all. Are you ready for the ultimate market breakdown? Let's go. First up, we're talking about the giants of the crypto world, the OG whales, and the seismic impact their massive sell-offs are having. We'll unpack exactly what these colossal trades mean for Bitcoin's ambitious journey to $150K and beyond. Then, we're shifting gears to dissect the sentiment driving the markets. Is the momentum fading, or is this just a pause before the next explosive move? We'll reveal the data that's painting a picture of the current market mood. Next, get a load of what one of the most aggressive corporate accumulators has been up to. We're tracking their latest massive acquisition and what it signals for their strategy and the broader market. Finally, we're bringing you the global picture, looking at how stablecoin liquidity and capital inflows are setting the stage for the next big plays across Bitcoin, Ethereum, and XRP. Stick around, because you don't want to miss these crucial insights. Make sure you smash that like button, subscribe for all the action, and hit that notification bell so you never miss an update. The whale watch, Bitcoin's big obstacle, are the massive sell-offs by influential, OG whales, creating a significant hurdle for Bitcoin's ambitious surge towards $150,000. This is the critical question on everyone's mind as the market navigates these powerful movements. Whale activity, referring to the trades executed by individuals or entities holding substantial amounts of Bitcoin, has a profound impact on market dynamics. These large players possess the capacity to significantly influence price action, and their recent actions have certainly sent ripples through the ecosystem. Two major whales have recently made headlines for offloading enormous quantities of Bitcoin. One transaction saw a staggering $2.7 billion worth of BTC sold, while another whale made an even larger move, swapping an astounding $4 billion for Ethereum ETH. These substantial sell-offs exert considerable downward pressure on Bitcoin's price, potentially stalling immediate upward momentum and contributing to increased market volatility. For investors looking to understand the forces at play, monitoring these whale movements is paramount. However, the market's trajectory isn't solely dictated by these large holders. Regulatory developments are also playing a crucial role in shaping Bitcoin's path. Recent legislative efforts, such as the Genius Act and the Clarity Act, are introducing much-needed clarity to the digital asset space. These regulations aim to govern stablecoins and provide clear definitions for digital assets under federal law, which can significantly boost investor confidence and potentially pave the way for sustained price appreciation. Furthermore, the U.S. government's consideration of adopting Bitcoin as a reserve asset through initiatives like a strategic Bitcoin reserve could have a substantial impact on the circulating supply. A reduction in available Bitcoin could, in theory, lead to upward price pressure. As regulatory frameworks continue to align the cryptocurrency space with traditional financial systems, we are likely to see an increase in market confidence and demand, which are positive indicators for Bitcoin's price. Institutional investments have emerged as a vital stabilizing force, particularly in mitigating the effects of significant whale sell-offs. These institutional players inject substantial capital and often employ long-term investment strategies. Their presence can help absorb large transactions, preventing the kind of panic selling that can exacerbate price drops. By cushioning the market from the immediate impact of massive whale trades, institutional involvement can contribute to a more stable trading environment. Despite the temporary dips caused by large whale transfers, the consistent buying from institutional investors has been instrumental in stabilizing the market. With the approval of Bitcoin ETFs and various futures products, institutional entry into the market has become more accessible, further bolstering potential support for Bitcoin's price. Navigating these complex market conditions requires a well-thought-out strategy. Investors are advised to monitor on-chain data closely, utilizing tools like Whale Alert to track significant transactions and gain insights into market trends. Diversification across various cryptocurrencies and stablecoins remains a key strategy to mitigate the risk of being overly exposed to the actions of a single large player. Employing risk management tools, such as stop-loss orders and maintaining a balanced portfolio, are essential for protecting against the inherent volatility. Ultimately, focusing on long-term trends driven by fundamental factors like technological advancements and regulatory clarity, in addition to technical indicators, can provide a more robust investment approach. Continuous learning and staying informed about evolving market dynamics and regulations are crucial for reducing vulnerability to whale-driven volatility. Hold on tight, because the story of whale activity and regulation is far from over. Next, we'll dive into the subtle signs that indicate a shift in market sentiment, revealing whether the bears are truly in control. Bearish undertones, Bitcoin's volume slump, is a lack of investor conviction and rising selling pressure, creating a bearish environment for Bitcoin. The latest data suggests a notable decline in both spot and futures volumes, painting a picture of waning enthusiasm. Bitcoin has been consolidating around the $110,000 mark, a period marked by a discernible increase in bearish pressure across the market. According to a recent report from on-chain analytics firm Glassnode, key indicators are signaling a shift in sentiment. The Bitcoin Relative Strength Index, RSI, has dipped from 37.4 to 33.6, slipping into oversold territory, which typically indicates growing selling pressure. Furthermore, Glassnode analysts noted a significant decline in spot trading volumes, which fell by nearly 9% to $7.7 billion. This reduction in trading activity suggests weaker investor participation and a growing uncertainty in market sentiment. As the analysts pointed out, lower volumes during price movements often reflect weaker conviction or bias behind the prevailing trend, directly pointing to uncertainty in market sentiment. The subdued participation indicates that bearish pressures continue to dominate the market's backdrop. This cautious sentiment is also reflected in the Bitcoin futures and options markets. Open interest in these derivatives has declined over the past week, a trend that Glassnode describes as a shift toward risk-off behavior following Bitcoin's pullback from its recent highs. Adding another layer to this analysis, Glassnode highlighted an increased influence from short-term holders, SDH, in the market. The SDH to LTH, long-term holder, supply ratio, has risen from 17% to 17.7%. This metric suggests a more volatile market environment, as short-term holders are generally more prone to speculative behavior and tend to make more reactive trading decisions. This increased participation from potentially more volatile actors can amplify market swings. Despite the recent uptick in bearish pressure, it's important to note that there are counterbalancing forces at play. Strong purchases from Bitcoin treasury companies and U.S. spot exchange-traded funds, ETFs, have been observed, reversing close to $1 billion in outflows to register significant inflows of $396 million last week. These institutional inflows provide a degree of support to the market. Moreover, some analysts believe that the market is yet to reach a cycle top. CryptoQuant analyst Carmelo Aleman suggests that prior Bitcoin bull cycles have historically featured significant price corrections before surging to new highs, implying that the current pullback might be a healthy phase. Aleman points to Bitcoin's institutional adoption and the growing interest in tokenization as factors that could drive prices higher in the coming months. Metrics such as the network value to transaction, NVT ratio, which compares Bitcoin's market cap to its on-chain transaction volume, indicate that Bitcoin has maintained a ratio below 50 since July 7, suggesting strong network activity and growth potential. Additionally, the market value to realized value, MVRV, indicator has not yet reached levels typically associated with cycle peaks, implying that prices have not entered an overheated phase. As of early Tuesday, Bitcoin is trading around $110,300, showing a slight recovery from a dip towards $107,000. While bearish sentiment is evident in declining volumes, the presence of institutional interest and potentially healthy market cycles suggests that the situation is nuanced. So, while volumes may be down, the underlying structure might be preparing for a comeback. But before we look ahead, let's check in on a major player that's been aggressively expanding its digital asset holdings. MicroStrategy's Bitcoin Barrage, another $450 M acquired. Is MicroStrategy doubling down on its Bitcoin strategy, adding another substantial chunk to its already massive holdings? The company's relentless accumulation continues, raising questions about its long-term conviction. MicroStrategy, MSTR, has once again demonstrated its unwavering commitment to Bitcoin, acquiring an additional 4,048 BTC last week. This latest purchase brings the company's total Bitcoin holdings to an impressive 636,505 coins. The investment, made for just under $450 million, translates to an average cost of $110,981 per Bitcoin. These recent acquisitions were primarily funded through the sale of common stock, with a smaller portion coming from the sale of various preferred shares. This funding strategy has recently become a point of discussion, particularly given earlier assurances from CEO Michael Saylor and the company that they would refrain from issuing shares when the stock's market-to-net asset value (MNAV) ratio fell below 2.5x. However, the recent volatility in MSTR's stock price has pushed the MNAV into the 1.5x range. With seemingly modest demand for preferred stock and no appetite for convertible debt, the company found itself in a position where continuing its sizable Bitcoin purchases necessitated a deviation from its previous promise regarding the MNAV threshold. The primary concern voiced by critics of selling common stock at such a slim premium to MNAV is the potential for dilution to existing shareholders. Issuing new shares when the stock price is not significantly above the underlying value of its Bitcoin holdings could dilute the ownership stake of current investors. Despite these concerns, MicroStrategy's Bitcoin holdings are currently valued at just under $70 billion, based on Bitcoin's prevailing price of $109,400. This staggering amount underscores the company's significant bet on the digital asset. In the broader market context, MSTR shares have shown modest weakness in pre-market trading, reflecting the ongoing market sentiment and the company's funding strategies. Analysts, however, remain largely optimistic. For instance, analyst Mark Palmer reiterated his buy rating on the company, maintaining a $705 price target. This target represents more than a double from the current trading levels, indicating a strong conviction in MicroStrategy's future prospects, even with its aggressive Bitcoin accumulation strategy. The company's equity shift, as some analysts at Benchmark have noted, is not necessarily a retreat from Bitcoin, but rather a tactical maneuver to continue its core strategy of accumulating the digital asset. This suggests that MicroStrategy views its Bitcoin holdings as a long-term strategic asset, and its financing decisions are geared towards maximizing that accumulation. MicroStrategy's bold moves highlight the ongoing institutional interest in Bitcoin, but what's happening on the global macro stage? We're about to break down the latest on stablecoin liquidity and capital inflows that are influencing Bitcoin, Ethereum, and XRP. Global Crypto Pulse, Stablecoin Liquidity and Fed Watch. As Bitcoin hovers above $110,000, is stablecoin liquidity and the looming Federal Reserve decision the key to unlocking the next major crypto rally? The market is keenly watching macroeconomic signals. Bitcoin, BTC, is showing subtle signs of strength, having rebounded above $110,000. The market's attention is now firmly fixed on upcoming macroeconomic events, particularly the United States Federal Reserve's September interest rate decision. Officials will be scrutinizing key inflation indicators, including the unemployment rate, producer price index, PPI, consumer price index, CPI, and jobless claims in the lead-up to the September 17th decision. Current market sentiment, as reflected by the CME FedWatch tool, indicates an 89.8% probability that the Federal Reserve will implement a 25 basis points interest rate cut, lowering the range to 4% to 4.25%. Such a move could provide a much-needed lifeline for risk asset classes, including cryptocurrencies and equities. However, the landscape for Bitcoin is complex, influenced by both micro and macro factors. The weekly stablecoin market capitalization has cooled to approximately $1.1 billion, widening the gap from the $8 billion growth waves that previously fueled the 2024 rally. CryptoQuant highlighted in a recent report that this slowdown signals a weakening pace of net capital entering the system. From a liquidity standpoint, this creates a less supportive backdrop for sustaining rapid Bitcoin price appreciation. Historically, growth in stablecoin market capitalization has closely correlated with rapid Bitcoin price appreciation, as it reflects the influx of fresh capital into the crypto ecosystem, supporting demand for crypto assets. Bitcoin is currently trading above $110,000, with bulls targeting the immediate 100-day exponential moving average, EMA, at $110,697. The path of least resistance appears to be gradually shifting upward, bolstered by optimism surrounding a potential Fed rate cut. A buy signal from the Moving Average Convergence Divergence, MACD, indicator further supports a bullish outlook. If traders increase their exposure in anticipation of a steady Bitcoin price rebound, momentum could build towards resistance at $118,510. The Relative Strength Index, RSI, at 43 reinforces this bullish sentiment, showing a rebound toward the midline, suggesting that demand for BTC is expected to increase. Despite these positive signals, macroeconomic uncertainty remains a significant factor. Upcoming inflation data will heavily influence the Fed's monetary policy. Critical support levels to watch include the 200-day EMA at $104,165 and the psychological $100,000 mark. A sustained decline below these levels could present dollar cost averaging DCA opportunities for investors looking for the next recovery attempt. Meanwhile, Ethereum, ETH, is continuing its consolidation phase between its all-time high and support around $4,000. While key technical indicators offer mixed signals, the RSI is slightly above the midline, indicating stabilized buying pressure. Ethereum's position above its key EMAs supports a generally bullish sentiment. However, a sell signal from the MACD since August 24 and a cooling of futures open interest suggest caution among traders. XRP is also battling to regain control, holding above its 100-day EMA support. While the RSI supports a short-term bullish outlook, a long-standing MACD sell signal warrants attention. The overall market sentiment appears to be influenced by the anticipation of monetary policy shifts and the ebb and flow of stablecoin liquidity. And that brings us to the end of today's deep dive. We've covered the whale movements, market sentiment, corporate strategies, and the global economic backdrop. Don't go anywhere. We've got a rapid-fire recap and your essential calls to action coming right up. All right, let's recap the market movers. We saw how OG whales are impacting Bitcoin's path to $150K, analyzed the bearish sentiment creeping in with declining volumes, tracked MicroStrategy's massive Bitcoin accumulation, and explored the influence of stablecoin liquidity and the Fed on global crypto markets. If you found this breakdown valuable, do us a favor. Hit that like button, subscribe to Bitcoin Bulletin for more essential updates, and ring that notification bell so you're always in the loop. Don't forget to follow us on all our social channels to stay connected. We'll see you in the next one.